Good morning, everybody. Hey, welcome to Thursday, June 11th. I hope that your week is going well. The markets have been struggling the last couple days, and looks like they're going to struggle even more today as we get ready to get going. Hey, I want to thank you guys for joining me. I've been preaching a lot now about this rise in the market. It gave you a great opportunity to make some shifts in your risk buckets. And so let me remind you that now is a great time before we see a further drop. I mean, we're right now looking to drop about 3% this morning if things continue the way they are. Give us a call at 863-382-0037, and let's schedule your financial risk analysis. Dave will be with us here in just a moment. I'm sure we got a lot of stuff to catch up on today.
Yeah, 101.7 Light FM. Good morning. Hello, buenos dias. I am glad you're here today. It is 8:40, 20 before 9. Check in on your money and find out what's going on Wall Street. I'm glad you're here, and I'm also glad Phillip Statler from Statler Financial Services is here because, boy, we got a data dump out of the federal government today and yesterday, and we're kind of looking at it and going, don't like what we're reading, aren't we, Phillip?
Well, at least I would say the traders definitely don't like what they're reading because, yesterday, once the Fed minutes came out and they started digesting that, we started to see a fall then in the market. And then this morning, they're just continuing that mood in a big way.
Absolutely. You know, the market always looks like a seismograph when the Federal Reserve announces their decisions. This time around, Paulson basically announced nothing's going to happen with our interest rates. We aren't, quote unquote, we aren't even thinking about changing interest rates. And the market went up, and then they started reading the rest of the comments as his press conference continued, and it started falling to the end of the day. It ended up being a good day on Wall Street at the end of the day yesterday because the NASDAQ set a new record. But the Dow fell at the end of the day. The Standard & Poor's ended up falling by the end of the day. And the more the traders read, the less they liked it. And the futures markets are looking like an absolute bloodbath this morning, aren't they?
Yes, sir, they sure are. And I kind of looked at the chart, and the chart basically, once the market closed, just continued its downward movement the rest of the evening. It had a little bounce, around midnight or so, but then it continued on down. So it's been in this trajectory since the Fed announcement yesterday.
Pretty much. Just to give you all a nutshell on what Paulson said in the press conference as to what in the heck is going on. After saying we're not going to make any interest rate decision, which we think would be good news, then Paulson says there's a tremendous human and economic hardship, said that millions of people won't get their old jobs back. They're not planning on even looking at changing interest rates maybe until past 2022. And he made notes that women, blacks, and Hispanic workers are bearing the brunt of the unemployment crisis. I mean, before you and I went on the air, I said the tape of Paulson's press conference could turn into a Democratic Party campaign ad for this fall, couldn't it?
Yeah, it really could. Those folks that are being disadvantaged right now, and that's a big deal, right? I mean, with everything going on, it's how fast are people going to get back to work and how fast are businesses going to be able to open back up. And, I'm still not sold on the fact that this economy is going to get moving as fast as they want us to believe it's going to get going. I felt like the market had a pretty big run up on a lot of hope. And I'm thinking the second wave of the coronavirus now is folks are finally starting to realize that very well could and probably will happen, and so they're starting to take some profits off the table again.
Yeah, when the market started going back up again, you and I were both saying, "Whoa, Seabiscuit! Wait a minute here. There has never been, at least in either of our memories, and I hate to admit it, but mine's pretty doggone long because I'm older than dirt. I can't remember a recession in which we didn't test the bottom of the stock market at least twice. And we've only done it once, and then we just kind of shot back up, started setting new stock market records. And while I tend toward being rather optimistic and rather bullish, that still scared me. And I'm not going to say we're beginning to look toward testing a bottom again, but looking at this morning, there's definitely an edge on it, isn't there?
Oh, definitely. I mean, I think that when you people that, let's face it, people that were adventurous enough to jump in back in and when the market hit its lows back in March, well, they've seen a 30% run up. Well, they're going to, if there's any indication that this thing's going to start to fall back down, they're going to take some profits off the table.
No, I can believe that, and it looks like they're doing it today. Once again, we're looking at a reaction to the Paulson thing from the Federal Reserve, putting out some pretty gloomy projections. But then we add to the point that something that you're hearing probably the epidemiologists on Facebook talking about, it's happening nationwide. Now that we're starting to open up, there is a spike upward in the number of coronavirus cases, and it's not just in Florida. It's pretty much nationwide. As soon as we open back up, we're starting to see more cases. Now, we can argue it 18 different ways. Florida says that we're watching the percentage positives coming off of the cases, and yes, they're staying relatively low, but the gross number of cases that we're finding, a lot more positive tests, and that's making investors jittery as well, isn't it?
Yeah, it is. I mean, and if you look at the numbers in Texas and Arizona, I think those are a little concerning, especially Arizona, because I think I saw this morning a statistic that said that 84% of their hospital ICU beds are full, and that's a significant number for them, and it has some significance in terms of this virus and what could happen there. So I think there are hot spots reigniting again, and it's just going to. It's going to cause people to stop, think, and to maybe pause again and say, okay, I'm not going to go to the restaurant today. I'm going to eat at home more. I'm going to be careful about how I'm spending my time outside of my home and making sure that I'm getting that social distancing and not taking any undue risk because of the increased numbers we're seeing.
And the language you're using kind of addresses the innate optimism I've always had. My hope was, as we started to open up, that people didn't get stupid and start milling around. Maintaining social distancing, yeah, go out to dinner, but keep a distance away and just basically don't be dumb. Maybe, just maybe voluntarily, we're going to end up doing the things that we should have been doing all along without government mandates.
I would like to say that I would hope that too, but what I'm seeing is not the case, Dave.
You are a bit more cynical than I, and sometimes the cynic ends up being right. Other information we got in this morning, we got the normal Thursday first-time jobless claims number, and 1.54 million first-time jobless claims reported from last week. According to at least one of your projections, that was pretty much spot on what people expected, huh?
Yeah, exactly. I mean, it's within 10,000 of what we were looking for. If you look at some of the other people, they were expecting 1.6. I mean, that's close enough to say, hey, we're in the ballpark, and it's less than what some people thought it was going to be. And I thought, well, maybe that would affect the futures. And so I started watching the futures when that came out at 8:30, and no, it didn't help at all, David. Actually, they started getting worse.
Using Zig Ziglar term, stinking thinking is starting to get to the top. There was some good news on the unemployment report, by the way. Continuing claims decreased again, down to 20.9 million for people that continue on unemployment. Those number of claims actually decreased, so that's some good news. By and large, none of that is really helping humor on the market one tiny little bit. 45 minutes before we throw some real money around, Phillip, we've been alluding to it, but looks like kind of a bloodbath. What do the numbers look like 45 minutes ahead of time?
It definitely is, Dave. We're down. The Dow 30 is down 3.25% right now. That's down 875 points. We've got the S&P 500 down 2.6. That's down 85 points, and then we've got the Nasdaq down 1.8, which is down 185 points. So everything is significantly in the red this morning, except for gold and silver. Imagine that. We've got gold pushing back up over $18 an ounce, up almost 1.5% this morning. And then we've got gold up 1%, $1,737 an ounce. And we got gold retrenching significantly today, down 7% to $36.84 a barrel.
And one would start to assume that the price of crude is getting pressured downward by an expectation of lower demand because of those coronavirus reports, right?
Well, I think that, but the other thing that came out yesterday, and there was no comparison number, but the crude oil inventory number came out yesterday, and I don't know if that's playing some into this too.
Oh, yeah, the problem we had a few weeks ago, where we're going to store all this junk because we aren't using half as much, right?
Exactly, yeah.
Exactly. Overseas markets pretty much look like you'd expect them to, given our travails. Asian markets all off. Hong Kong down by over 2%. Japan down by the better part of 3% at the close this morning. British and German markets over on the European community also down substantially. Germany is down by over 3% midway through their trading day. Well, I can't say we didn't tell them we told you so. What goes up got to go down. If you're looking at your retirement account and saying, woo-wee, you may need some advice. Phillip, how do I find you to get that stabilization advice?
You know, I've been talking now for a while that as this market continued to climb up, it was a great opportunity to have a financial x-ray of your current portfolio. And I hope folks out there did that, took advantage of that. You know, if you didn't, give me a call at 863-382-0037 and schedule your financial x-ray to determine how much risk you have in your current portfolio. You know, you can catch us on Facebook almost every single day. All you have to do is go to Facebook, Statler Financial Services. You'll find us right there. We post and rebroadcast this segment every day. And then join us for our Statler Financial radio show, 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings on Highlands News Talk, 7:30 a.m. And Dave, I notice we're not streaming yet because of the lightning strike. When do we think we're going to get back streaming?
Oh, our streaming is back up on everything. I'm missing one channel on Light FM, but everything else is streaming,
Gotcha.
And we're working fine. The lightning is, I won't say it's over, but at the very least, we've recovered mostly from the storms of this past weekend.
All right, man, you have a great day. I'll talk to you tomorrow.
Thank you, my friend. We'll see you then. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Wait in.
Folks, I want to thank you for joining us today. As you can see the screen right now, everything is definitely to the red and red significantly. I hope your day goes well. I look forward to speaking to you again tomorrow. Until then, so long.